Hello, I'm Rachel Jones for the Finance News Network. Joining me today from Sequoia Financial Group is Managing Director and CEO Scott Beeton. Scott, welcome to FNN.
Rachel, thanks for having me.
So first up, could we start with a brief introduction to your company?
Sequoia Financial Group is listed on the ASX. Our market cap is approximately 32 million. We provide financial services to self-directed investors and their trusted advisors such as an accountant, financial planner, stockbroker and a mortgage broker.
So now to your first half 2018 results. What were the highlights?
Well, the highlight for us in the year from a financial point of view is our revenue for the 6-month period cracked $20 million, which is great to see, which gave us a respectable net profit after tax around $630,000 and our EBITDA was slightly higher, around 1.25 mil. And that highlights the strength of the business. But more importantly, had we completed the InterPrac and Morrison transaction at the 30th of June, so from the 1st of July, that number would have actually gone up with revenue over 32 million and our profit EBITDA around $2 million approximately. Our deferred revenue account comes about because we have certain products and services in our business. Because of the accounting standard, we can't actually recognise all the revenue up front as revenue. So what happens is we have to defer it over the life of the period. So if that product lasts for 3 years, we actually have to put the revenue over a 3-year period. However, we've actually had most of it come to us, we've received it and we never need to refund it. So in the period, that account went up over 2.3 million and the account is now over $5 million. So in a normal, if we work more on a cash basis, our financials, that would be adding considerable more money to our bottom line and our profitability would increase over 2.3 million for the period.
And can you give us an overview on other products that you provide?
We're actually quite broad in what we offer to the market. So our target distribution goes through to your accountant, your financial planner, your stockbroker, your mortgage broker, or alternatively direct to your mum and dad investor. So an example of a product and service we provide to an accountant, we provide our legal document services where that could be the establishment of a self-managed super fund deed or alternatively the corporate trustee for it. Another service we provide direct to the consumer is our online stockbroking service, such as provided through our subsidiary Morrison Securities.
Thanks, Scott. And now to the acquisition of InterPrac. What was the rationale there?
I look at a lot more as a marriage of two companies with very similar culture and wanting to achieve similar things. So InterPrac as a whole is a diversified financial service firm, predominantly in licensing for financial planners, but also has a whole suite of products and services around self-managed super funds. And we saw that as very complementary to the Sequoia Financial Group products and services, where it completes out our full suite of solutions for the self-managed super fund market, but it also allows us to broaden our reach into financial planning and also to the underlying clients of financial planners.
And what impact will InterPrac have on your 2018 financial year results?
Well, for InterPrac, just remember we completed that transaction on the 1st of December 2017. So we're looking around for a 7-month period. We're looking at adding approximately 10 to 15 million of extra revenue, and we believe that will produce between $750,000 to $1.5 million to the bottom line for the year.
And now for a more general question, how do you see the financial services industry changing over the next 5 years?
Basically, the financial service market has been changed greatly and continues to change. There's plenty of disruptive technology that keeps coming and the industry's at the front of understanding and being able to cater for these changes. But I really see technology really impacting on the day-to-day life of investors and advisors and basically enhancing the overall experience.
Last question, Scott. Where do you see the company over the next 12 months and longer term?
Well, over the next 12 months is really we need to keep bedding down our 2 acquisitions we did last year, which was InterPrac in December, and earlier than that we did Morrison's, and continue our path of doing what we do better, growing our profit, our core business. And the good news is the strength of where the business is at today with the cash we have at bank, which is over $12 million, is that we've formalised our dividend policy, and I'm happy to announce that we will be paying between 20% and 50% of our profit after tax, net profit after tax. And moving forward after or longer than 12 months is that we just want to continue our growth strategy of acquiring other businesses that are value accretive, but also focusing on everyday business.
Excellent. Scott Beeton, thanks for the update.
Thank you.